Hello once again, I'm BR Schultz. Thank you for joining me for another BR Schultz SP500 episode on YouTube. And I am looking at the Einstein model, or what I used to call the zigzag model, for the macro lows. And I'm noticing that I think markets are going to be range bound or lower into mid-June of 2025. So I don't think we're really bottom for some time, unfortunately. So whatever the market, I think it's just gonna be, it could just be choppy markets. It's gonna be kind of a trader's market, if you will, into the end of Q2 2025. So let's just jump to the model and go from there and keep this to a short video. Donation QR codes and donation link below this video, and PayPal link below the YouTube video down in the description. Thank you for following me. So I thought I would bring up the zigzag model and bounce the two tops off one another. And if you look at that, you'll see that it looks like the model is predicting that there will be a low in mid-June of 2025. So my understanding of this is that because the time is so condensed, that more than likely we're going to have either range bound or choppy markets, lower markets into mid-June for that final low. So the March 21st, 24th low will be some type of, I think, macro low of sorts. But it doesn't seem to me that that will be the final bottom, so to speak, or the market won't finally reach its, sideways to lower final base point or bottom until sometime in mid-June. So yeah, this is going to be a very interesting market for the next what is it, another 3 months, it looks like. So I didn't want to, obviously you don't want to you don't want to see more, right? When you've kind of focused in on one day, you kind of want to ignore it and say no, I want to keep to my earlier date. I don't want things to be prolonged. But if anyone's enjoying this choppy markets, this trader's market, looks like we're going to have more of it until sometime in mid-June. So that's let's see, is that like the whatever that Fed meeting is? I guess that'll be the bottom, right? If it's mid-late June. I'll keep an eye on this model, of course, and keep checking it and double checking it, triple checking it. But I've double, triple checked it tonight, and it looks like it's back test really well for the March 2020 low, for other lows. So again, I'll watch it, but I am seeing that what I believe I'm seeing is that markets will be in a muted state, if you will, until end of Q2 2025, or more specifically, I think around mid-June will be the final bottom. So you kind of need these gold wave checkpoints to kind of all clear out before the market can start going up again. So I think that this will be the final bottom, hopefully. Yeah. So I don't know everything that's in between right now. So I know some of you are probably going to ask me what's going to happen in between. I don't know all that right now. We made the 5 waves up off the mid-January low, and we could do some kind of 5 waves off of the March 21st, 24th low, so to speak, into end of May. Very possible. So it could be similar to what we saw from mid-January to mid-February. It's kind of, we kind of had those shatter markets where you wake up one morning and the markets were down 150 points or whatever. It could be something like that. But whatever's happening, the Fed is changing gears of some sort, or how the Fed is handling markets, or its infusions into markets, or its algorithms. Something's changing because there's just a lot of turmoil in the markets, if you will. And you might say that because the news reports to you, those reasons. And my argument would be You really don't know what those arguments are. The media says whatever they want to say, right? They're going to say whatever they're paid to say, actually, and whoever benefits the most from what they're being said. So you shouldn't listen to the media if you want to understand data. That's number one. You should do your own research as much as possible if you would truly want to understand data. That's how I think that's why I think that's why I'm becoming so successful at what I do, is because I don't listen to any news. I purely look at the data. And the gold wave that you're seeing on your screen essentially was formed back in 23 and 24, before Trump even took office, right? Before any of his executive orders hit the markets. That happened in 2025, right? So all the market gyrations and collapsing and everything is all based on historical data that occurred in 23 and 24, right? In my view. So it has nothing to do with Donald Trump. He is simply trying to claim the narrative. So the media always tries to claim the narrative, right? So whatever happens in the market, it claims that this is what it is, this is what it is. It doesn't have to be that at all. If the markets crash 300 points, they're going to say, well, it's this, it's that. It's not that at all. As you know, my opinion is that historical data determines the future, so it has nothing to do with current day events as far as what's really happening. Yeah, they put a tag on it. The market's crash might be waiting for a current day event, right? And it might look as though it really is the current event that's causing the crash. But in my opinion, you can't have a luxury vehicle at the snap of your fingers. It goes through a manufacturing line, right? It goes through a process. It has to go through the production plants, has to get the parts, has to get the assemblies, has to get the tires. So that takes months. It can take months, right? To produce a whole car. So same with the markets. You can't produce a crash within a very short time frame. It's built up over time. It's created over time. And so that's what I'm trying to argue with my models. It really has very little to do with current day events. It has everything to do with historical data. And so I believe, again, that's why I believe I'm able to trade it so well, is because I understand more and more the data that's behind what's happening, not the news that gets pumped into the media space. In my opinion, again, the media can make up whatever narrative they want, and if the general public is willing to buy it or forced to buy it, then that's what floats, right? So essentially, in my opinion, it has nothing to do with current day events. And this is what got me kicked out of my economics class back when I went to college, is I made the same argument. The historical data, the historical decisions of the past, of the Fed, of the Treasury, of tax rates, of inflation, the things that really matter, right? The energy costs, those things are what causes the market's fluctuations in the future. Like if you plant a seed today, you're not getting an apple tomorrow. You have to wait years before you get the apple tree to grow. Now we can go to the store and buy a fully mature fruit tree of sorts, and get fruit very quickly from that tree, but that tree still had to grow somewhere, correct? So that's the argument I make, is the economic output that you see today was grown weeks and months prior. So you're seeing a collapse in markets into mid-June of 2025, and in my opinion, people like Donald Trump can buy forecasts from very reputable forecasting companies, right? He could get a dozen of them, let's say. And let's say 10 out of the 12 all suggest the same type of movement in markets. They all say into Q2 markets are going to be soft, okay? So in my opinion, it's either the media tries to claim the narrative, corrupt Congress tries to claim the narrative, or a president or someone else tries to claim the narrative, right? So it's about grabbing the power that's at stake. And so obviously you have to come up with a very strong medicine for the public to believe what you're trying to say. So again, in my opinion, it's really about historical data. In the politicians' eyes, they need to sell a narrative to get the public to believe it. Okay? What's interesting to me is we all know when a major company like Apple or Amazon, they miss earnings horribly, right? And the price goes nowhere. Goes absolutely nowhere. We've all seen it. We're like, what? That doesn't make any sense. And then we've seen Apple and Amazon and other companies miss or beat just by a little bit, and all of a sudden the shares skyrocket, right? And you still look at it and you're like, that doesn't make any sense. It's because, in my opinion, the historical data is what's driving the current day pricing. It has very little to do with the current news. So again, my main thesis is that it's historical data that really makes a difference in earnings. It's the moving averages, it's things of that nature, and their relationship to one another. That's how W.D. Gann and all these other legends from the past, they don't listen to media, they don't listen to news, they trade the data. They understand the data. They work with models to understand the data. That's why W.D. Gann was so sought after, right? It's because he made millions, not because he said, I learned how to listen to the news really, really well. I learned how to read a newspaper really well. That's not why people follow W.D. Gann. That's not why he made millions of dollars. He learned very highly technical rules and behavior patterns of pricing data, right? Had nothing to do with current day events. Hardly anything. 97%, I would say, not to do with current day events. That's why Gann was able to make like 160 trades or whatever in a month's time and make 80% of his calls, because he only did data. He only did market timing. He didn't listen to the news of that day and trade off the news. He was extremely good because he knew the mathematical construct of pricing. That's all he did, right? That's why he was so famous, is because he didn't do things the way that the media and everyone else wants people to do things, right? They all want you to subscribe to their subscription, that they're going to give you the hottest and best information about some new up and coming product, and it has very little to do with that sometimes. A lot of the time it's just historical data that is so influential on future pricing. And yes, I do find it very interesting sometimes how the news will come out almost exactly where the model is predicting a bottom or a peak. I find that very intriguing as well. So I understand everyone will say, well, the news comes out and then the markets fall 300 points or whatever, and right when the news broke, and I have to agree, it's very interesting to me how models and math and all these things work together. It's very intriguing to me. Don't get me wrong. But at the same time, how can you predict crashes like the one we're going through, and how can you predict it so well, right? How can the moving averages work so well with it, right? There's very much a balance, very much a physics, an engineering side of this that you can get a glimpse of every now and then, but you can't exactly put your finger on it, right? Because it's hard to come up with these mathematical equations that are hidden. They're deep hidden secrets, if you will, in the math world, and it's very hard to pull those out of the deep, so to speak. And so hopefully you're seeing that some of my models are able to do that, but just to kind of show you where I believe markets are going to go. I don't think that we'll see the bottom until we won't see the bottom until the end of Q2, probably around the end of June. So markets are lower than mid-January, right? So the argument I would make is that markets will not bottom until this gold waves crash completes itself. Now again, I will monitor it. I'll look at the equation of it. I'll study it. I'll make sure that doesn't change. Let's say, when I put more data into it, or maybe, I need to check it a few hundred times. Could perfectly need to. But from what I'm seeing, I don't think that we're going to bottom until, the end of Q2. Which is kind of sad, but at the same time, you want to be sober. You want to understand what's happening so that you make the wise decisions, right? And so some of you might say, well, that actually makes pretty good sense, because usually markets run up into Memorial Day in late May, and then they take that summer lull or that summer sell-off. So, Now, some of you are going to say right away, well, is that the lowest low? I will have to give you a better judgment as we get more data, but yes, I would actually argue that the lowest low, or the retest of the lows, let's say we hit like, I don't know, 5,400 around March 21st, 24th, right? 5,400. Could we retest that at the end of June? We certainly could. Could we be lower? My argument would be either retest or lower, right? So if we hit 54 in middle of March, maybe we hit 5,000 in middle of June, or maybe we hit 4,800, right? Just to really scare some people, right? To think once you break that 5,000 mark, people start getting scared. We'll say, well, where's the bottom? Is it 4,000 now? You know, so maybe we need to break under 5,000 a little bit just to scare people, get some people to sell shares and loosen up a little bit. But then obviously my macro target is still around Super Bowl of 2028 for the macro peak in markets. Yeah, but anyways, yeah, I've got about, what, a 17-minute video here for you. And so that's where I'm seeing things. I still think that there's some kind of major bottom around March 21st, 24th. Don't get me wrong. And again, it could be like some 5-wave move up from there into end of May. But again, I don't think that, I think markets are range bound to lower into that mid-June low or that late June low. So I'm BR Schultz, SP500. If you enjoy my work, please share it with friends. If you enjoy my trading style, which probably I couldn't believe the last 2 days, phenomenal, right? I think I must have made like tons of trades, and most, you know, like 95% were profitable. I couldn't believe it. It was just so much fun. Just so much fun. And I play my moving averages is how I play those, right? So I gotta get a general feel of where we're going through the videos that I create. But then I really try to use my moving averages, measure 70 points on the SPX500 USD on tradingview.com. I really do 70-point movements. I really do. And use my moving averages like crazy. So yeah, if I become some wealthy tycoon someday, maybe I'll share some of my work, more of my secrets of my moving averages, or maybe I don't know. I don't know where this path leads, that the Lord will let me do this, but I try to give away all my work for free because I feel that, I don't know. I think that's how you really show people respect. And again, if you want to donate, please do. But if you don't have money, if you're hard up for money, you're in a financially bad position, please do not send me any donations. There's too many Christian organizations out there that ask people for money, and they shouldn't. There's, you know, if there's people that are needy, you don't ask the poor for their money. You try to bless the poor, right? That's the whole point of having a gift. So I really feel like God's given me a gift through my faith in Jesus Christ and going through all the hardships in my life so that I might bless others. I really believe that. And so, yeah, if you're in a financially hard position in life, do not donate. Give glory to the Lord Jesus Christ. Give glory to God for my gift that you've seen me use, and that maybe it's been for your benefit. But if the biggest way you could give to me is then to share my work. If you're financially in a bad position, share my work with others. Tell others what you've seen, what you've heard, how you've seen me play the game. Maybe you're not able to trade, but you're like, hey man, I followed this guy on his blog, and he was buying 0 DTE options, and he hits like 50 to 70% of the time on his 0 DTE options because he's doing these 70-point moves on the SPX500 USD that anyone can watch on tradingview.com. So if you like the show, if you like the entertainment aspect, and you can't donate, and share my work like wildfire, man, and obviously give glory to God. That's what Jesus did when he healed people, right? So if you study Jesus' life, he healed people, right? He gave away the power he had, right? He felt compassion for others. He was kind, considerate. He healed people. And then when they wanted to go around and tell everybody, he said, don't tell anybody. He said, go tell the city council, if you will. Make sure that they allow you back into society if you had leprosy, right? That you've been confirmed as healed and clean, and then give glory to God. That's all he told them to do. He didn't want them bragging about him. He didn't want them bragging up. They still went and did it, right? But if you listen to Jesus' words, he wanted them to give God the glory and go to the city council and show themselves as whole, right? So that's what we're to do when we are giving away some of our gifts, maybe to the less fortunate. Don't ask them for money. Don't ask them for what they have, right? Do not, right? And I think sometimes Christians get a bad rap because you get a lot of these fake faith healers out there that they just want people's money, and so they pretend like they can heal people. They never heal anybody, right? You never heal anybody. If they would never ask for a dime, but go around and heal everybody, you know how many people would actually believe them? It would be phenomenal, and it would spread like wildfire. But it never does, because these people, most of them are snake oil salesmen. And then you'll hear about people that go over to third world countries, and they're like a missionary or something, and you'll hear that they heal someone, but they're never on TV. They never make a big deal about it, and they never get their name noticed. They don't want it noticed. That's the whole point of it, is because they're in a poor country preaching the gospel, and when someone's healed, they don't want anyone else to know. They want the person to give glory to God, and they want it to remain be up to the Lord how good comes out of it, right? So that's the same with my work. I don't want the poor to give me money. That's not the goal of it. The goal is to bless the poor, is to bless everybody with it as much as I can, right? If my timing is hyper accurate and you're just beside yourself in how accurate it is, then enjoy it. I hope that the masses really enjoy this, and maybe only get up to 1,300 followers, someday, or sorry, 3,400 followers someday. That's fine with me. If they're thrilled by my work, then that works, right? That works. I think it's amazing. But my account right now is up, I think, around above 25% since February 19th. And from the looks of this graph right here, I think the choppy seas are going to continue into the end of Q2 2025. Some of you are waiting to donate by March 21st, 24th. That's awesome. Can't wait to receive some of those donations. So I'm looking forward to that. But please understand that we could have another 5 waves up and a lower low in end of June. And I don't necessarily know how it all plays out at this time. So please give me some time to learn and kind of adapt, try to understand what's going to happen. And I don't know how deep the low on March 17th is going to be. It could be very deep. It kind of ties out with like some of the patterns for February 3rd. So it could be a huge sell-off over the weekend. And then the Fed comes out. There's a peak at the Fed date on March 19th. And then we crash again into March 19th into the 21st, 24th. It could be a sideways move from the March 17th low. Let's say we crash down into 5,400, let's say, on March 17th, right? Could be a retest of 5,400 on May 24th or May 21st. But if you were to ask me where I want to put my 401k back in, I'm not a financial professional, number one. I can't give any professional advice. So this would be my own personal take on my own 401k. If we were to have some very monstrous low on March 21st or 4th, well, then I would probably put a portion of it in. But I would think that my money would best be placed for my 401k, being in all cash, would be around the late June time frame. And I guess you could have put a 401k to work around mid-January. Still could get out around February 19th. You could have made some money on it. So I might try. I mean, we've seen 5 waves up from the mid-January low, and then we're seeing this exhaustion into March 21st, 24th, in my opinion, for the final bottom. And then we could have 5 waves up into end of May. So I mean, if we bottom at, let's say, 5,400 in mid-March, late March, you could go back up to 5,800, end of May. So you could make another, let's say, close to 10%. You could make 10% back, and by the end of May, and people think, we've cleared it, and then all of a sudden you could have like a 10% drop off the end of May, right, into the mid-June low. So something like that. I really don't know. I would tend to think that the waves down could be very severe, for like wave 2 whatever. So it's very fickle right now. It's hard to say, but I would think that this is kind of, remember in 2022, the low was in October of 2022, and if I would have played my cards right better than I did, I mean the model had an exceptional run, but if I would have played it right, I would have held on to my longs there, right, instead of making a fool of myself. And I think it's because the gold wave was similar to this, and it picked out mid-October as the final low. So I would think that that was the lowest low of the year, right? That was like around 3,500, 3,600 in 2022. So I'm guessing that the lowest low is going to be at the end of Q2 2025, according to this graph. So thank you so much for watching tonight, and or whenever you watch it, I guess. And hopefully this is spot on. Hopefully this is as accurate as all the other calls have been playing out. But again, sorry I didn't really play this out sooner. But I think I got so wrapped up in calling out the March 21st, 24th low that I kind of overlooked this in the gold wave. And so, yeah, I don't think markets are done selling off or going sideways for another 3 months. Another 100 days. So, thank you so much. Have a good one. Until next time, I'm BR Schultz, SP500. So hopefully you've enjoyed my show today. Warning, this is all forecast use only. Come here. You want to read this for me? What does that say? Forecast?
Forecast.
Use
only.
Only. Right. And what's this say?
Warning.
Disclaimer.
Disclaimer. I am not
A licensed investment professional. That's Latin. So say caveat emptor. Seek professional advice prior to investing. Investing bears risk
of
financial
loss.
Very good. And so basically this is saying if you ever try to invest in stocks or anything else, you could lose money. Warning, warning, warning. And all my graphs are subject to change. And not all the results are not always the same. Yeah. Thank you for reading for me.
You're welcome.
And that's it for today. I'm BR Schultz. Until next time, take care.